Hello, everyone, and welcome to Reimagine 2021, brought to you by Mousebelt. I'm your co-host, Ashlie Meredith, and today we're bringing you a very special anniversary event. This is our 10th edition of the virtual blockchain conference series. We've been putting this on since May of last year. With COVID lockdowns, everyone's stuck at home. We really wanted to bring community and education to you virtually, and we're just so grateful that we've been able to do that for this long, and that all of you are tuning in and all the followers that we have accrued over this time. And so for this anniversary event, we want to check in with some of our guests that have been with us since the beginning, get some more updates and look to the future as well. So without any further ado, I'm pleased to introduce our next guest, Paul Brody. He's the principal and global blockchain leader at Ernst & Young. Hi, how are you today, Paul?
I am great, thank you. Thanks for having me.
Yes, thank you so much for joining us. It's a wonderful kind of full circle to have you back again. You were gracious enough to join us at our very first event, and I believe you were also here for our second event. And, that kind of led to you being able to participate in the long form documentary style podcast that we are working on, which we'll get into a bit later. But for now, let's kind of look at, what you talked about almost a little over a year ago and kind of updates since then. You did a really exciting survey back then of 230 blockchain companies, finding that not a lot of people were using private blockchains, but that 75% of them were going to be looking at public blockchains. So have you completed another survey like that? What's the word as far as enterprise blockchain and what companies are thinking these days?
Wow, Ashlie, you have an amazing memory. Yes, that is, in fact, we talked to 230 companies, and indeed, what we found over and over again was, yeah, everybody wants to rule the world, right? They all want to have their own blockchain network, and they want to invite their partners. And what we found was that for every one company that was willing to join somebody else's blockchain, two companies wanted to start their own. And that just doesn't scale, right? You don't end up having any users on your network. So as you mentioned, right, 75% of the people who went through that experience basically said, we need to move to public. And since then, the question we've been asking is, okay, that does seem to be the case. All of our clients are in the same direction. One of the things that's really noticeable is kind of demand for lots of new private blockchain solutions has largely evaporated. But the question then becomes, what is it that you need? What is it that the enterprise users need in order to get over to public? And that was the subject of a joint survey we did with Forrester of the same group of companies earlier this year. And we kind of learned two really important things. First of all, they are really maturing their approach to blockchain based on that experience. So they're shifting their focus from which network or which technology do I use to how do I implement securely? How do I think about kind of structure and infrastructure and security on a public blockchain? And very importantly, they're starting to ask this question, what does the broader ecosystem look like? It's one thing if you're a big buyer to ask all of your suppliers, hey, come join my private blockchain. But if you're going on a public blockchain, okay, so you want your suppliers, but you also need other services for them. If you're buying stuff from them, you want to know what kind of shipping companies are on this blockchain. Can I get insurance? And the reality is that outside of DeFi, outside of financial services, the blockchain ecosystem for enterprises is still lightweight. It's not mature enough. It doesn't provide a lot of value-added services, and the potential is really large for lots of service providers, lots of competition, a better deal, but it's not realized yet. And that's what we found in this survey that we did in cooperation with Dell and Forrester Research.
Awesome. Well, thanks for that update. I think a lot of the conversation has focused on this kind of debate between public and private blockchains and just educating people out there, especially people new to crypto. What's a public blockchain? What's a private blockchain? Maybe just in a couple of sentences explaining that, and where is that debate now?
So the debate really got started back in the early days of blockchains. There was just blockchains, right? There was Bitcoin, and shortly after that, there was Ethereum. And what you realized very quickly, if you worked in enterprise software, as I did, was Ethereum is awesome. It's this incredible computing environment where we can have shared business logic and shared information. But it has one really big problem for enterprises, which is they believe that the content of their business agreements are really important competitive advantages. So if I want to do a digital contract with you to buy stuff and pay for it and have a volume discount, if every one of my competitors can read that information, I've given away too much important stuff. So then people said, okay, I need privacy. How do I do it? And it turns out that if you make data private on a blockchain, on a public blockchain, you break what's called the consensus algorithm, the mechanism that allows everybody to check each other's data. Now, there are two ways of fixing this. There's an easy way and a hard way. The easy way is to create a private blockchain, right? And that the problem with that is it undoes the one thing that's really attractive about a blockchain, which is that there's no powerful central authority. Instead, a central authority checks, instead of everybody else being able to check each other's data, right, in what's called a proof of work or a proof of stake consensus, you use something called proof of authority, which is basically I'm authorized and somebody is checking, but not everybody can see the data. That sounds nice in theory, but in practice, it means you have to pick a central authority to manage the network. And now you're back in this problem, which is, hey, if I wanted a private network, I could have built one. I didn't need to build a blockchain. There's a harder way to do this, which is to use some very fancy math called a zero knowledge proof. Zero knowledge proofs are really, really tough math, but the idea is kind of simple. I'm going to give you a proof that says that what I'm telling you is true, but I'm not going to show you the actual data. I'm just going to show you an equation that allows you to test that what I'm saying is true. That's really hard. I used to think I was good at math. It turns out even I can't really wrap my head around it, but it works. It works really well. But it was harder to implement, and it took a little bit longer. So really what happened was there was this easy path. A bunch of people took it. It solved the short-term problem of privacy, but by breaking the whole point of the blockchain. And where we have focused on and where we've worked with other open source providers on is building open source, zero knowledge proof-based math tools that let you have privacy, but do it on a public blockchain. And so now that these are available and they're starting to work at scale, we believe kind of the debate's over. If you want a blockchain, if you want this ecosystem with no central authority, the only way that's worth doing is doing on a public blockchain.
Absolutely. So speaking of this open source solution that you're building, you've talked before about how maybe the core community at first in crypto, that it took some time for them to trust you, but as you were actually contributing to the ecosystem, that has changed. And where would you see that it's at today that, people in crypto maybe had suspicions about legacy institutions buying in or getting involved, or enterprises, and where do you think it's at today?
Well, I can't speak for all sort of big institutions, but I can say that certainly at EY, we feel like we are a part of this community, and it's been really fantastic. There was actually it was an Ethereum anniversary event the other day. Vitalik Buterin actually gave us a bit of a shout out about our work on privacy technology. So we're contributors to the ecosystem. We feel like we are well integrated and respected. We feel like we know what our value prop is in terms of helping large enterprises feel comfortable and contributing to the community. So I felt at times like a rough start, but now I feel like all this investment we made in building those relationships and investing in the community have started to pay off nicely.
Absolutely. And that's a good lesson for anyone else who might be in a similar position, that this is such a community-oriented industry, and making investments in community has a great return on investment. So for this zero knowledge proof project and scaling Ethereum, saw the news a couple of weeks ago that you've just released your third iteration of this project. Last time we talked, you've been working on it for about 2 years, so it's been another year now. Any updates on that project?
Yes, so two big updates in terms of the big push in privacy, and one of them is around this technology called Nightfall 3 that we've released into the public domain. If you think about all business agreements, they kind of boil down to something very simple. One party has money, the other party has stuff, and they're going to exchange money for stuff under the terms of some agreement, right? Some kind of contract, right? So that's how it goes. Well, we've been working on two things for the last few years. The first is, how do we make this transfer private, So we feel like we've gotten the transfer to a very, very mature state. Nightfall 3 is what's called a ZK, a zero knowledge optimistic roll-up infrastructure. And what it allows you to do is roll up a whole bunch of zero knowledge transactions and then use something called an optimistic roll-up to deploy them on chain. And the reason why optimistic roll-ups are important and useful is they shift how you verify transactions. In a traditional blockchain transaction, you have everybody verify every transaction. In what's called an optimistic roll-up, you take the optimistic view that everybody's being honest, and it deploys the transactions automatically without asking everybody to verify everything. But you have a week to verify your own transactions. You have a week to verify your own transactions. And if you find any problems, not only can you have the transactions reversed, but you can also penalize the other party for having put in a dishonest output. So ZK optimistic roll-ups allow us to have privacy with very low transaction costs. So that's the third version. And we have some exciting improvements coming to that one, but we were already at a price of transactions that's in the pennies category. The second big thing that we made progress on over the last 6 to 9 months is a second project that we're calling Starlight. And Nightfall is all about a really private transfer, right? No visibility, right? Under dark. The second issue, though, is how do I do the business logic, right? It's not just that I'm giving you this and you're giving me that. It's if we had some kind of agreement. Like if I buy 1,000 widgets, starting from 1,001, my price gets lower. So the other thing that we wanted to do is to make sure that we could write business rules as secret logic as well. And so that's now in its kind of alpha version. It's out, and also a public domain asset. And that's the other half of the equation, which is private transfers and private business rules. And when you can combine those two, you can pretty much build any kind of business agreement and implement it on a blockchain.
So this would be the actual conditions of the smart contract, for example. It would also be private.
Exactly. The if this, then that, when you pay this much, you get that much back. Those rules, right? If you imagine a contract where it says, I'm going to buy 1,000 widgets for $10 each. If you pay the 1,000 times $10 and you receive the widgets, if those transfers are done secretly, that's great. But if everybody can read the contract that has those terms in it, you haven't saved yourself a lot. So it's important not just to have the transfer be done, but also the business logic of the contract be private. And so now that we have those two things, we can really start sort of cooking with very sophisticated business transactions on the blockchain.
That's amazing. And for people who are concerned about scaling Ethereum and have seen, the big problems with transaction costs, can you explain how you've been able to reduce transaction cost in this instance?
Yes. So transaction cost is one of the biggest issues that we come across when we talk to like big enterprise clients. We hear a lot of similar issues. They're worried about the carbon footprint, right? Especially with regard to Bitcoin, less so with Ethereum, and especially with the transition to proof of stake. But the second thing that they're worried about is, what about my transaction costs, right? And it's funny. I don't know how much they realized it was a perfect analogy, but when they started talking about gas prices, right? In Ethereum, the cost of a transaction, the amount of energy you need to put into a transaction is called gas. And when the price of gas goes up, the cost of your transaction can go up enormously. And when you talk to clients and they say, I'm worried about transaction costs, it's a perfect analogy, right? What happened was the price of gas went way up, and we all had to start thinking much, much more clearly about how efficient we were going to be. And there are kind of 2 or 3 big things that people have been doing. One is optimistic rollups, like I talked about. This allows you to reduce the amount of work on everybody and therefore reduce around the gas fees, right? And those are called layer 2 rollups. The second thing is to create entire layer 2 networks. And a good example of this is Polygon, right? It's a layer 2 network that's built on proof of stake. You can do all of your high frequency trading and transactions in that side chain and then push them in a batch onto the mainnet, or push the results back onto the mainnet. So that is a way of moving some of the more expensive business logic and other transactions off the chain and then bringing them back. So between layer 2s, roll-ups, and then soon to be kind of the transition to Ethereum 2.0, I feel more and more comfortable that the risks of high transaction costs are gradually getting behind us.
Awesome. Good news for the blockchain space. So
Yes.
speaking of good news, how has EY been doing as far as business? I think you've had a blockbuster year.
We have. I mean, I think every sort of crypto and blockchain company has had a blockbuster year, but it certainly felt like, you know, if I go back to February or March of 2019 or 2020, a year ago, it certainly felt like we were just starting to maybe come out of this like painful crypto winter. And what I didn't realize was that the year ahead was not just going to be a modest year of gains. I had predicted, modest gains for the coming year. It was going to be this blockbuster year. And in the end, it turned out that we performed so well that I think our 4 or 5 year compound annual growth rate is something like over 100% now. And the last year was a blockbuster in terms of key revenue milestones, sales milestones. I can remember when the largest deals that we did, the first deals we did like $50,000, $100,000 deals. In the fourth quarter of the fiscal last year, we did 4 deals over $5 million. It just feels like a different world. And what was really exciting is by crossing all of these key thresholds in terms of customers, volume, revenue, headcount, profitability, the rest of EY started to look at us in a very different light. And you saw that most prominently back in May when the firm committed $100 million in incremental investment over the next 3 years. So I feel like, I don't want to say I feel like we're all grown up now, but I don't feel like I have to apologize for being the blockchain guy anymore.
That's always nice. I know it's amazing to finally have people in my real life, not my blockchain life, actually talking about blockchain at all. So for the $100 million investment, what kind of stuff is EY investing in?
So I think to me, what's really exciting is we have commitment at the top of our firm to keep doing what we have been doing, which is product engineering and true mathematical research. One of the things I'm really proud of is these Ethereum community contributions like Nightfall and Starlight. We have a commitment to keep those going. Secondly, we are doing something a little bit different from a lot of other consulting firms, which are very sort of like people times hours. We have expertise, and we have a lot of that, and we're getting more. But what is fun and exciting and makes me really happy is we're building products, right? And if you go to blockchain.ey.com, you can see real product that's available as a SaaS application. And I'll just give you a couple of examples of stuff that we're building that's really specific and interesting and useful. And the first is something that we created called Bitcoin Visualizer. Now, over the years, there have been lots and lots of big Bitcoin frauds, money disappearing, and very frequently, you get invited by a company. They call you up and they say, hey, we're missing some money and we kind of need to know where it is. In fact, we've even been brought in as court-appointed administrators for companies. By the way, I definitely recommend, you want to hear a great story of that, go listen to the Exit Scam podcast. But after a couple of these, we sat down and said, what is it that we do when we get asked these things by our forensics team? And we created something called Bitcoin Visualizer, which allows you to see the actual flow of money into and out of addresses and through transactions in a visual way. You can literally follow the money. And it's really cool. It's incredibly visual. And it's nice because not only does it work for Bitcoin, but our goal is that over time, it will also be deployed for supply chain, for operations. You'll be able to see where your pint of your donated blood went. It came blood products and went to donors and things like that. So it's a really cool visualization tool that came right at that work. Another really good example that we're working on and have built and is available is something called smart contract testing. And what's really cool about this is, we are headed to a future where every company, every individual is going to buy stuff using smart contracts, but most of us are not coders. So how do we evaluate whether that smart contract is going to do what we think it's going to do? Our smart contract testing system does a couple of things. Number one, it lets you set up tests, right? So let's say somebody says, in this NFT smart contract, we're never going to issue more than 1,000 collectible tokens. You can test that, right? You can actually test the code and make sure that it's not going to do that. And you can even run simulated transactions. So you can test a transaction before you do it. So I think, although it's still relatively early stage, I believe it's the kind of thing that everybody's going to want to use eventually as it matures. So it's really exciting to make product. I have to admit, like for me, this is a big deal. It's a great step forward for us to be really investing in product. And you can actually, even a lot of this stuff you can go and you can try at our website, which is blockchain.ey.com.
Yeah, actually sounds like a really good educational tool, especially for any of our students tuning in. You know, we have our university program. We mentor and connect with students from 100 universities in 24 different countries. So definitely recommend people, any students tuning in, to check out mouthspell.university and all of our amazing interviews at Reimagine 2020 YouTube channel. To smash that subscribe button, check out Paul's previous interviews, and a lot of educational content there as well. But we've had, you know, we have our own open source block explorer, and I know students have used that to kind of teach people, you know, having that visual way of looking at the blockchain. It sounds like a really good educational tool. So I'll have to recommend that to some of our student teachers. You're also working on a project with Microsoft. Have any updates for us about that?
I do. The Microsoft project is a great project. It's all about the Xbox video game system, and it's really cool for so many reasons. One of my favorite things is I love doing this. I love reminding my fellow EY partners that we are building software for Microsoft, and it's hilarious. They're like, "No, I'm sure you must mean we're making PowerPoint for them." No, right? We're not making charts. We're not doing process design. We are building solutions in software for Microsoft, and that's really cool. It's the highest form of flattery, and we established this incredible partnership with Microsoft. We are working on the smart contracts that support all the purchasing of Xbox video games. And we have taken those and we are putting them on, and we are transitioning them all to a private Ethereum blockchain. And Microsoft is building the infrastructure and the technology with us to manage the scalability. And this is really cool for a number of reasons. Number one, Microsoft's transaction flow is enormous, right? The Xbox video game system does somewhere between 1 and 3 million transactions a day. So you're talking about a real fire hose of transaction volume. Secondly, Microsoft has something on the order of 30,000 different contracts with their suppliers, almost 3,000 different suppliers. So it is a hugely complex system. It's not like, hey, pay a dollar, get 70 cents. It's like, after $100 million, you get a 2.2% rebate for the next 400 million in revenue, but then it goes up to 5%, except for, you know, in months that end in Y. Like the terms are complicated and it's really challenging. And what's cool is a couple of things. Number one, we've built a smart contract technology. Number two, we have had huge ROI from Microsoft. It's like our test ground to prove to clients that you can do work at scale with big return on investment. And I'll give you a good data point. It used to take 45 days after the end of the month for Microsoft to go through all of their transactional data and apply all the contract terms. And now, 4 minutes after you make a transaction, the completed process transaction with the right royalty amount and rate and everything is done. So went 45 days down to 4 minutes, which is, I think, pretty good. And we also went from, you know, we cut basically the cost structure about in half. So, you know, high ROI, much faster, and we're pioneering a whole bunch of cool technologies like using Microsoft's Azure machine learning tools to scan contracts and extract the key business terms. So they're really pushing the envelope for us. We now have more than 500 different suppliers on the network, and we're growing it all the time. So it's Microsoft is a great partner because they're willing to go first. They push the envelope. Our most advanced stuff is done for Microsoft, and then after we really get beat up by the maturity of Microsoft's process because they are really, really industrial and scalable. Then we can take that stuff, we generalize it, we make it more widely available.
Absolutely. Well, that is so exciting to be building software for Microsoft.
It's very flattering. Once we have this stuff done for Microsoft, we've actually built a more public version which does a similar thing but runs on the public Ethereum blockchain. It's called off-chain network procurement, and it actually takes a lot of the lessons we learned at Microsoft and makes them generally available into the public. And we just now have our first couple of clients who are starting to prepare to do enterprise procurement, business transactions with private logic on the public Ethereum blockchain. And I'm really, really excited about that.
Well, yes, awesome. Thanks for sharing all the updates from EY. Now, you and I got to meet in person couple months ago in San Francisco, we were filming a long form documentary style podcast series called Coins, which we'll be releasing at the end of this month when this interview airs. So, kind of wanted to tease some of our viewers and let them know some of the things that you were talking about. One thing that I thought was really interesting that maybe you can speak a little bit to here is you said that nothing has woken up your financial clients like DeFi, even more so than the price of Bitcoin, which of course, when we were speaking was up to 60. It's gonna settle back a little bit down now, but could you say more about that?
Yeah, the Coins podcast was really amazing, and the timing was so perfect to sit in the San Francisco Mint and talk about the future of finance was a lot of fun. And at the time, we were just seeing the ramp up in DeFi, and it has not stopped. And this is the thing that people underestimate. When crypto prices go up to 60,000, when they go back down to 30, for Bitcoin, when it goes back down to 30, people certainly they stop thinking about it. But DeFi has changed how banks and institutional investors think. They used to look at crypto and they say, oh, this is something I can sell to my clients. It's like another stock, another bond. DeFi is different because now what they see is a competitive ecosystem. It's not just that I can sell digital assets, it's that this digital ecosystem is capable of recreating the same functions I have in my bank, in my asset management service, in my lending service, and it's capable of doing it with a tiny fraction of the cost and complexity. And this has been transformational. And we are seeing kind of three really, really big things going on that we're working on with our banking clients. Number one, and this is just widespread, it's almost a commodity now. Every single bank, institution, savings investor, brokerage, you will be able to buy Bitcoin, you'll be able to buy Ether from them by the end of this year, right? If not now already, right? That's commoditized, it's going to be everywhere, right? They're going to do that. Secondly, more importantly, those existing banks and institutions have looked at DeFi and said, wow, this is an incredible opportunity for us to put our assets to work. And so the second big thing you're seeing is you're going to see the tokenization of real estate, bonds, stocks, and not just so I can have a version of the stock market on the blockchain. That's not the point. The point is I can take those assets and I can plug them into collateralized lending, deposit services, liquidity pools. So they're going to put those assets to work in a way that they have not been in the past, right? And part of it is a fear of DeFi, and part of it is a search for yield. And then the third thing that's happening, and this is perhaps the most interesting and exciting, is it's the seamless convergence of DeFi and CeFi. And what I mean by that is we're headed towards a future where if you have a bank account, you'll be able to tell the bank, hey, I have $5,000 in my bank account. I want to pay this bill through my electronic bill pay service. I want to pay this bill through my Circle USDC blockchain Ethereum wallet, right? I want to pay this Ethereum address, right? And when somebody wants to send you money, you're going to give them, you're going to go to the bank and say, hey, what's my Ethereum address? Can I give my friend my Ethereum address? And they're going to send you USDC, and it's going to show up in your bank account, right? They're going to send you MakerDAO. It's going to show up in your bank account, and it's going to feel almost like this, especially with stablecoins. It's going to feel like this seamless kind of back and forth. And if you want a loan, you'll be able to get it from your bank, and it'll show up in your Ethereum wallet. But it'll be this seamless experience, and you're seeing this because the banks are busy building their crypto capabilities, and the crypto natives are busy getting banking licenses. So we are headed over the next year or two for what I think is going to be an epic competitive battle.
Absolutely, because there's been this whole almost parallel financial system being built with DeFi and crypto, especially for people who are unbanked. There's almost like an entirely other system with all of the services that traditional finance offers, and you see that they're going to start reaching across the aisle and kind of bridging that gap.
I think that's mostly true. I want to take issue with one thing, which I think is one of the most persistent myths in the world of crypto and blockchain, which is this idea that crypto and blockchain are somehow essential for banking the unbanked, right? And by the way, I believe banking on the unbanked is extremely important, but I don't think it's crypto that's going to do that. The unbanked aren't unbanked because the banks don't want to provide services to them. The unbanked are mostly unbanked because the regulatory environment makes it difficult for them to get bank accounts. I've been to countries where you need 2 utility bills and a passport to open a bank account. And that's really hard to do if you don't own a home or even have a fixed address. And so, and where we've seen tremendous progress in parts of Europe or East Africa, right? That hasn't been because of crypto. It's been because the regulators have significantly simplified the rules for banking the unbanked. India, East Africa, parts of Europe, it's challenger banks, it's digital banks, it's financial inclusion, it's lots of tools, but it's not being fueled by central bank digital currencies, and it's not being fueled by crypto. Those are could be useful elements, and they could add to the competitive ecosystem. But I think some people are guilty of ESG washing their messaging by talking about banking the unbanked when they know perfectly well that crypto isn't the key. It's regulatory issues that are blocking the unbanked.
Absolutely. A great point. Yeah. And something I think people don't think about enough. So more conversations like this on our Coins podcast. Any thing else you'd like to say to people about why they should tune in?
You know, I'm just one of a whole bunch of excellent people you have, right? These interviews are very good. It's not often that we get a chance to talk at a bit more length about some of these capabilities. So there's plenty of good interviews in there. I definitely recommend watching more than just one of these.
Excellent. Thank you so much, Paul, for joining us. And for anyone who's just tuning in, this is Reimagine 2021 Virtual Blockchain Conference Series. And we've been speaking with Paul Brody from Ernst & Young. Thanks for tuning in and stick around for more.